Hi everybody, I'd like to talk to you about the basics of debits and credits, but before we get there, we need to talk about the three equalities in accounting because that's an important concept as we keep everything in balance. The first concept, the first equality, is the fundamental accounting equation. Assets equal liabilities plus equity. Now we recall that's the balance sheet. This is the fundamental financial statement. So we've got the fundamental accounting equation, assets equal liabilities plus equity. But then the balance sheet, remembers a snapshot. It changes over time when there's activity in the business. So what causes the activity? Where do we record that? So the fundamental accounting equation is going to change to, it's going to expand. Assets equals liabilities plus equity minus withdrawals plus revenues minus expenses. Okay, this is the fundamental accounting equation that we've got to stay in balance, to keep it in balance. Every single transaction, regardless of what it is going to keep this fundamental accounting equation in balance. The next equality we look at is that debits equal credits. All debit means is left-hand side. Credit means right-hand side. And just like any other math equation, to stay in balance, the left-hand side has to equal the right-hand side. So debits have got to equal to credits. The third equality we look at is what they call control equals subsidiary, which means that control is the total, and the details have to equal to the total. For example, all that's saying is that in your accounts receivable, you've got a bunch of people who owe you different amounts of money, but your total of the accounts receivable of all your details have to equal the total that you put on your balance sheet as the grand total of what everybody owes you. And we look at that at accounts payable too, that you owe people. And that total of the details of the people that you owe, the entities that you owe, has got to equal the total of that you put on as a liability on the balance sheet. So the details have got to equal the total or control account. So we've got to keep these three equalities balanced if our accounting system is going to be right. So when we look at debits and credits here in just a second, is especially important to remember all of them, but remember the first two. So we're going to look at the fundamental accounting equation and always remember debits equal credits. The left-hand side of the equation has got to equal the right-hand side. So let's take a look. Okay, let's look. Remember, debit means left, credit means right. And remember the fundamental accounting equation, assets equal liabilities plus equity. The balance sheet expands to this equation. Assets equal liabilities plus equity minus withdrawals plus revenues minus expenses. Okay, look at each account. Okay, debits are always on the left, credits are always on the right. They had to start somewhere. And so when they started, assets, the first one here, debits on the left, credits on the right. Once you remember that, gang, you've got it down because the first two are a mirror image of assets. So to get the math to work, liabilities and equity, we noticed here under assets, look, a debit is a plus, but liabilities and equity are a mirror image. They're reversed. So a credit is a plus. A credit is the increase. And then that's going to keep them in balance. Now the other accounts, the other three, owner withdrawals and revenues and expenses, change on how they affect equity. The entity earns revenues. Equity is going to go up. So equity changes along with revenues in the same direction. So equity is a credit balance to go up. Revenues is a credit to go up. Okay, withdrawals and expenses are taking money out of the business. That's reducing equity. So they're going to be just the opposite. So withdrawals and expenses are going to be a debit, and they're eventually going to be closed out into equity, and the debit is the negative. So just remember, if you can remember assets, debit's an increase, credit is a decrease, liabilities and equity are the mirror image of assets, and then these other three accounts change as equity changes. And just remember, accounts will always keep positive balance, whatever is positive for them. Anyway, this is a look at the three equalities in accounting and debits and credits. I hope it helps.